Philip, thank you so much for joining us today.
Hey, Elijah. It's good to talk to you again.
All right. Now, we haven't had you on in a while, so why don't you give our viewers an update on the current state of the U.S. economy and where you see it heading?
Well, the current state is the same as it's been for a long time, which is it's nothing that's any different than a Ponzi scheme, a fraud. Bernie Madoff even said it himself years ago. And the thing that I've been saying for quite a while is these frauds can last a long time. And folks in our community sound like Chicken Little, the sky is falling. But that doesn't change the fact that it is indeed a fraud. So we have to stay the course. And it's great that you continue to do your show and I do mine, because even though sometimes we may feel like we're preaching to the choir needs to continue to hear this. We need to remind ourselves that this QE, artificially low interest rate, central banking economy is not real. And we are all going to discover that at some point. And Ben Bernanke did not have the courage to act. His book will eventually end up in the fiction section. But we're just going to have to wait it out. And it's been tough, especially for those of us who are gold bugs and love silver. Anybody in the precious metals community can attest to the fact this has been a long 7 years. But there will be a payoff. And the real state of the economy is that people went to the polls and they elected Donald Trump, and they did so for a reason. He was the human hand grenade, as Mike Moore said, that they were throwing at a system that they felt had really cheated them. And although he's doing his best to, as a businessman, try to fix the problems that he believes are in the U.S. economy, all he's really done is managed to pump up the stock market even more. And your average American, the folks that I try to help with my pro bono financial counseling, really hasn't felt the benefits of that. So it remains to be seen if his methods will work, but I anticipate they won't. And whether it comes to unemployment figures or other economic statistics, in my mind, they're all still very phony. So we just have to stay the course and keep preparing spiritually, financially for what's coming. I mean, this has been the second longest economic expansion in U.S. history, and it's all built on a house of cards, and it's all going to come crashing down. And for anybody who remembers 2008, this next economic bubble, when it bursts, is going to be much, much worse.
Now, those who do remember 2008 also remember that precious metals fell at first with the stock market. What is your perspective on what will happen this time?
I think that if we had a true free market in precious metals, they would have seen the same explosion in terms of price as we've seen in the cryptocurrency markets. And I know that a lot of us are frustrated by that. I mean, if you're a gold bug and a silver bug and you're hearing people boast in the crypto community about all their gains, it's somewhat frustrating to hear that. But what I think what's really going on there is the cryptocurrency market has kind of acted as an escape valve for what should have taken place in real money, gold and silver. But if you let me use an analogy, I mean, imagine if after Hurricane Katrina you were stuck on a roof and the Coast Guard came by in a helicopter and they lowered down the basket and they said to you, Elijah, get in. And you said, no, I'm waiting to be rescued. And then maybe a powerboat came by and said, Elijah, it's time to get in. And you said, no, I'm waiting for the way I expected to be rescued to come by. And then eventually the tide rises so high and you drown. I think this market, the cryptocurrency market, is a lifeline. And as I've had guests on my show say, Bitcoin and gold are complementary to one another. Every time I've bought gold and silver, Elijah, I've had to use currency. And cryptocurrency is no different. except with cryptocurrency, it's actually a real free market not controlled by a central bank. And there are plenty of gold dealers now accepting Bitcoin and Litecoin and others in exchange for metals. So if your audience has found themselves staunchly opposed to the cryptocurrency markets, I would just try to encourage them to take another look. Resources out there to educate themselves, and why not enjoy the increased purchasing power of both markets and have them complement one another. And the first place I would go to, a recent documentary came out with the director, Tim Del Mastro. I had him on my show. It's called Bitcoin Beyond the Bubble. He also did another one called Magic Money, the Bitcoin Revolution. If you hear my words and you're out there and you're pounding your dashboard right now because you just hate the cryptocurrency markets, put your ego aside and take a look at this market and just buy a little bit. Check it out and wait and see what happens. And if you don't like it, maybe a year from now you'll discover, hey, I don't like cryptocurrency markets, but I can use my Bitcoin and buy a 100-ounce gold bar or something like that. And it's a win-win in my opinion.
No, you have been discussing a lot about Bitcoin on your YouTube channel. And one of the things that, a lot of people who don't like Bitcoin say is that it's just another electronic asset like stocks and the other things that, when there's doubt, when people lose confidence in the financial system and in electronic forms of wealth and paper forms of wealth, Bitcoin is just another one of those. So what is your argument to them saying that Bitcoin is actually maybe on the same level as hard assets such as gold and silver?
Well, I think, to be honest, it appears to be, I've had Dave Kranzler on my show, and he uses this term. It's a contra asset in that, like gold and silver mining stocks, when the market goes down, these may have a tendency to go up. And sure, we're experiencing tremendous volatility, and anybody who bought Bitcoin in December is licking their wounds, and they're probably thinking, gosh, I finally got talked into it and I'll never do that again. But what we're really going through is the volatility associated with the replacement of a monetary system. This central banking debt-based fiat monetary system, it's on its way out. And anybody you talk to who's younger than the age of 40, and especially younger than the age of 30, does not trust the stock market. They don't trust the housing market. They don't trust traditional qualified plans. They watch their parents get burned. They've been burned themselves by student loans. And based on their studies of blockchain technology in the cryptocurrency markets, this feels like a much more trustworthy option. There are a lot of scams out there, though, especially with all these ICOs. And that's why your listeners need to educate themselves on the differences between many of these cryptocurrencies that you see on coinmarketcap.com. Just like the internet stocks, most of these are going to go to zero. And there will be winners and losers. There will be an Amazon, Google, Facebook, and Netflix version of cryptocurrency. There will be winners. And those winners are going to make its owners tremendously wealthy. And it's already happening. And I don't think it's going to stop. This really is just the beginning. So, again, this, if I can just say it one more time, this volatility we're seeing in the cryptocurrency markets is what you would expect to see anytime there's a wealth transfer associated with a shift in the monetary system. And sure, many of us thought it was going to be into gold and silver. I even thought that in my 2016 book, Financial Judo. But as I began to study the cryptocurrency markets, I realized we actually might be rescued in a different way. And it's time that we begin to prepare ourselves and kind of balance the preconceived notions that we may have had before, that it was going to all flood towards gold and silver and mining stocks. And I mean, you've even seen big names out there like Mike Maloney himself who've kind of come to this conclusion. So it's not a case where we have to remain in one camp. I think we can have a foot on both sides and benefit accordingly.
Now, do you think it's possible? I mean, it seems like what you're saying is maybe we were wrong about precious metals and that, you know, people will actually rush towards cryptocurrencies. Is that actually a possibility that things are different this time and that there's actually been this sentiment change in people? They don't care about physical assets anymore. Is it possible that the days of gold and silver being money are over?
I don't think so. I think it would be a statement full of hubris to say that the days of gold and silver are over. With a track record of thousands of years, anybody who says that is probably creating a soundbite that they never want played ever again. What I will say, though, is that this time is not different. And we know from financial history that we get a new monetary system about every 40 or so years. So why would this time be different? Why wouldn't we get a new monetary system? I mean, this system has been long in the tooth, and it's only as a result of 300 to 500 year historical low interest rates that they've been able to pull another rabbit out of the hat. And I don't think a world superpower has ever embarked on monetary foolishness of this kind. You know, maybe Rome, but we have really pulled out all the stops on economic sanity. So this time is not different. You know, be very careful. Anytime you say that gold and silver are unnecessary or that this time is different, I would watch out for anybody who says anything like that. I would just go back to my initial argument, which is gold and Bitcoin are complementary, and you don't have to be just in one camp. You can be a proponent of both, and I think over time you're going to benefit from both.
Now, another topic I'd like to discuss in this interview, because you've done some research about it, is the auto market. And your perspective is things are going to change very soon. Can you expand on that?
Sure. Oh, just from my own research and talking to people, and again, more anecdotal evidence, it seems that there is a pretty serious glut of new to barely used vehicles out there. And I'll tell you a quick story. So we in the Kennedy family, we drive our cars into the ground. And the last time we bought a new car for the family was a 2004 Toyota Corolla, and we bought it in 2007 because we don't buy new cars. That's one of the principles of good financial sense. You buy a used car with low mileage. So we did. And my wife paid back in 2007 about $14,000 for that car, back when the price of gold was around $700. And now our family's grown. Here it is 11 years later. We've got a 2-year-old or a 3-year-old and a 6-year-old son. And it was time to finally get a minivan. And I kind of wanted to postpone it as long as I could, but it became obvious after a long trip to Kentucky with the family. So we started searching, and we picked a Honda Odyssey, and gold's around $1,300 now. You compare that to $700 back in 2007. And if you divide 1,300 by 700 and you multiply that by 14,000, the price we paid for the Toyota Corolla back in 2007, you get the price of a Honda Odyssey now. So what is that telling you? It's telling me two things. First, something your audience will enjoy hearing. The price of gold over time is supposed to buy you things that are equal to or better in quality. So we can check that box. And secondly, Elijah, this minivan was absolutely loaded. It had every bell and whistle you can imagine. Our Toyota Corolla didn't. So I think this is just another distortion that we're now seeing in the U.S. economy. They've been buying things they can't afford. They have to unload it at discount prices. They sell it to a dealership or in a private sale. And over time, for people who've been preparing along the way, there are going to be exceptional deals out there. And, I tweeted about this. I joked that I took out a loan for this vehicle. And why not? Normally my principle is to pay things off and pay with cash and never take out debt. But when our government foolishly has plans that allow people to take out a loan at 4% for 72 months, and meanwhile I'm seeing my cryptocurrency skyrocket over time, I joke, why would I send them my precious Bitcoin when I can just send them worthless cash every single month for 6 years? So I know that statement might be somewhat controversial in different circles, but this is my point. I mean, there's so many economic distortions in the marketplace, especially in the auto market. So let that encourage your listeners, because I think down the road and not too far, they are going to be able to spend their gold, silver, and Bitcoin and buy things deeply discounted that they never could have imagined.
Right. And I think the principle of gold and silver holding their value, that's more like a long-term thing, right? So in the short term, though, we might be in a cycle where gold and silver actually increase in value and you can purchase more, like you're saying.
Yeah, that's right. And even as badly as they've tried to hold down the price with phony paper contracts on the COMEX, it's still never got below 1,000, and it's still at 1,300. So the metals are doing what they're supposed to do, and cryptocurrency is doing what it's supposed to do. I think that we're witnessing a wealth transfer, and it's taking a long time, but it's definitely playing out, and these things tend to speed up. I said it on my show, the stock market looks very toppy to me, and why wouldn't it? I mean, one day it was down 1,500 points at one time, and it's never quite gotten back there. And if you look at the one-year chart, it looks like it's fallen off a cliff. Now, I'm not going to go out on a limb and say that's it, it's over. But what I am going to say is I expect further QE sometime this year or next, because they're not going to have the courage to act, as Ben Bernanke so eloquently titled his book. The courage to act would be to do nothing and let the free market take over.
Right. I mean, if you look back at how the stock market acted in 2008, it went down a little bit at first from its peak, but then it took a little while for it to actually fall off a cliff. And if we're seeing kind of a repeat of that, it could fall off a cliff, maybe in a couple months, if it's parallel to 2008.
Yeah, it could. It's really tough. What did Yogi Berra say? Predictions are hard to make, especially about the future. But I think it helps to use ratios. Continue to look at the gold silver ratio. I think it might even help to look at the the Dow gold ratio, and maybe even look at the Dow Bitcoin ratio. I think we may see that go to 1-to-1 in not too distant future. I mean, it practically did at the end of last year. So be on the lookout for that. These are all warning signs telling us. But I think the best warning signs, your audience is clued in. That's why they listen to your show. But they have friends and family who aren't. So keep reaching out to them. Keep spreading this message. Keep telling people, hey, things aren't right. These are the things you need to look out for. And maybe set some metrics in place. Like, hey, remember how I said, if gold and the Dow got to 4-to-1 or 3-to-1, maybe something was happening. If you kind of catch people in advance, then you can hold them accountable down the road. And that's the main thing. We're all trying to protect ourselves, and I know we all care about our friends and family. So use these tools as a way to hold others accountable and say, hey, this is something we really need to talk about, because you said when it reached this point that, that you would admit, right? That's what I always like to do with my financial counseling, is lock people in, because sometimes they're afraid to admit to them. They won't admit something unless it seems like it's really far out. And then when we reach that goalpost, I can say, all right, well, you said this back then. Now it's time to hold ourselves accountable.
Now, getting back to gold versus Bitcoin, when people are looking at their own portfolios, what is your perspective on some things they should consider? You're thinking probably invest in both, but like what proportion and what things should they consider to make that decision?
Well, I've heard everything from 1% all the way upwards of 20%. With all of this stuff, it's whatever you feel comfortable with, whatever allows you to sleep at night. That's the proportion that's right for you. But if you're someone who is a precious metals bug, maybe even 1% sounds like a waste of money. So I think that's where a good financial counselor comes in and sits down and talks with someone and asks them, okay, what are your goals? What are you trying to accomplish? And work the conversation from there. But if someone, I heard Eric Sprott say once that his precious metals holdings are upward of 80%. And he feels very comfortable with that. And that's great, for him. But there's probably a lot of other people, especially if all they've got is a 401k, that they would be extremely nervous over the last 7 years watching their account get chewed up. So I don't think there's any rule of thumb that's right for any one person. Me personally, I'm definitely overweighted cryptocurrency because I do believe that this is a change in our monetary system. It's evolutionary, and it's going to make a lot of people extremely wealthy in the process. And it already has, and it's going to continue to do so.
Right. And when you say it's evolutionary, what do you mean by that?
So, just like any technological advancement that requires adoption, if you go back to the first time maybe you ever ordered something off of Amazon and it showed up on your doorstep 2 days later, you had a sudden instant realization like, oh, wow, I'm going to be able to do this all the time. And that is really going to change the way I shop for things, what I buy, when I buy it, how I buy it. And it was never the same for you. And the same way with music. The first time you ever downloaded a song, you instantly realized, oh, wait, I did not have to go to the mall and walk into a store and buy an entire CD. I can now simply buy my favorite song, and I can load all these onto an iPod or a smartphone and listen to them whenever, wherever I want. So for me, it's this instant light bulb going off. And when you start experimenting with cryptocurrency and you see how easy it is to use, you see how low the fees are, the consensus conference is going on, and these guys jokingly protested out front saying, blockchain is a con, and we're bankers against Bitcoin, and it was all a big farce, right? Because this is the industry that's going to be upended as a result of this evolutionary technology. And just like we once had to ride a horse to get places, I think there will come a time when your typical millennial doesn't even think about opening a checking account. And this is going to put a lot of pressure. It's not going to eliminate banks overnight. There will be a need for banks, I think, for certain transactions. But I think that when Jamie Dimon comes out and criticizes Bitcoin and calls it a fraud, he's doing so out of a self-interest. He knows that his business model that has made he and his cronies extraordinarily wealthy over the last decade especially is going to come to a drastic halt. And, just like, Sears is having trouble, just like Circuit City no longer exists, just like you don't see anybody selling CDs in a music in a mall any longer. This is what cryptocurrency is going to do to our banking system, and I think it's the greatest thing we'll ever witness in our lifetimes.